as we've come out of this Thanksgiving holiday and we are moving into the Christmas season and into December, which tends to be a very bullish period in the year, something that's really important to look at is market participation. And what we really want to see is that there are more companies inside the S&P that are participating in any kind of bullish movement. This will just give us a stronger sense or greater conviction that it's not just one company that's kind of pulling us into a positive direction, but that it's the wider breadth of the 500 companies that are participating in bullish movement.
But before we get started, the disclaimer. You have to trade responsibly. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than the investment, regardless of which asset class you trade. Therefore, you should not invest or risk money that you cannot afford to lose. Options trading is not suitable for all investors. And again, these videos are for educational purposes only. You must do your own due diligence and research before setting up any of these strategies in your live account. But please do practice them in your sim account immediately so that you can start to get used to how each of these strategies work as there are changes in the market throughout the day.
And so as we can see here, we were up a bit higher recently, closer to, well, not quite the 80%, but I should point out, these are the three indicators that I am talking about. They're not technically an indicator. What they are is a chart that shows you how many companies inside the S&P 500 are over the 50 moving average, 100 moving average, and 200 daily moving average. And so when you are coming out of like kind of flat movement in the market or bearish movement or even really strong bullish momentum, what you want to see is that there continues to be strong participation across the different types of companies and the different companies inside a particular index. So as you can see here, there was a significant period where the number of, I will actually look back more than a year, that will help us get some more, so here you can see that when we were on this like full-on bull run for so long, and especially during 2020, market participation in the S&P was up really close to this like 80%. So it meant that 80% of the companies were trading higher than their 50 daily moving average, which means that 80% of the companies inside the S&P were trading directionally in a bullish way. And so that gives you conviction that not only are maybe the main players quite bullish, but also even the smaller players in the smaller sectors that are in the 500 companies of the S&P, that they're also participating in that bullish movement or that bullish momentum. So right now, as we're going into December, and supposedly it's supposed to be this really bullish time of year, we really need to see that this market participation changes. It can't just be like the big dogs, the top players, the Tesla, the Google, the Microsoft, the Apple, Amazon, even though they do make up a very, they do make up a very strong percentage inside the composite because the SPX is a weighted composite. So not all 500 companies have an equal weighting or equal percentage inside the SPX. But we do need to see that there's some strength behind the movement. So today, Monday, following the Thanksgiving holiday, we did see this kind of like hop up. that, that SPX and NASDAQ had, overnight had, or over the weekend had actually had some more bearishness, but we're actually opening up on the Monday. But then the question is, can they sustain that? And more often than not, when you see that the market participation, that more companies, or I should say fewer companies, are in a bullish trend above the 50 moving average, that's not a very strong bullish signal that we are moving out of kind of this slumping period. Now, let's also look at the 100 moving average, and we will see that also that that from the 500 companies in the SPX, we are also losing then a percentage of the companies that are trading above their 100 daily simple moving average. So this is also really important because it shows that now we are not only below the 50 and that more companies are falling below the 50, but because of the trajectory that they were on, they're also quickly losing the 100 simple moving average. And I will explain that a little bit. So what happens is, let's say that we kind of zoom out. Let's look at something like, okay, let's look at Google, right? We'll just pick any chart. And right now, because Google has just consistently been on this uptrend, we would expect that the 50 moving day average will be significantly higher than the 100 and the 200 moving day average, daily moving average. So we can actually look and see, we can add that so that you can kind of visualize what it is that I'm talking about. So we'll make this the 50. We'll make this the 100, and we'll change the color. And then we will add another EMA. And so you can see that, on a company like Google that has been consistently bullish, that the EMAs, not only are they stacked positively, so the 50 is above the 100, is above the 200, but that for a period they were actually separating. So it meant that we were not only bullish, but we were bullish with a very strong upward trajectory. So we weren't just bullish by pennies and cents. We were actually making significant movements upwards. And that's how the 50 average opposed to the 100 average are starting to pull away from each other. Now, in another company, let's say where the underlines have moved more in a consolidation pattern, that they've gone through a period of distribution. So we can actually look at the IWM, even though that is not part of the SPX, but because the IWM has been moving in such a tight range for the last almost year, we've been moving in this price corridor, basically right here. Essentially, we have moved the 50, 100, and 200 EMA almost on top of each other. And so what this means is that when a lot of companies are losing the 50 EMA, so they're below the 50 EMA, and they're below the 100 EMA, it means that for a very long period of time, they've been in consolidation. And so, or they've been in this accumulation period. And so they should actually have the energy from having been trading within this sideways movement for so long. They should have the energy to actually reach up to new highs. And when they don't do that, they will very quickly lose the 50, 100, and even in this example, we're about, the IWM is about to lose even the 200 exponential moving average. So maybe some other examples would be, I'm trying to think what would be, let's see, like Apple also has some consolidation periods. So let's oppose to the Google, which Google had consistently been, stacked positive. We can go back and just so that you can see, Google has been consistently stacked positive. And now you're starting to see the 50 come a bit closer to the 100. But then you look at something like Apple, where you have these periods of consolidation that last a few months, that actually then the problem is that it's very easy to lose the positive stacking of the exponential moving averages. And so now that we have had this, a bit of a pullback because of the news surrounding this new coronavirus variant, and we've had, we're having increased inflation. So this has been a bit heavy in the market. And so as we can see, if we look at just look at the SPX generally, we had this pullback. And I mean, it's not like the end of the universe, depending on how you've structured yourself. But I mean, we're moving back to the all-time high of a month ago, right? But what we need to see is, are we actually going to have a really positive follow through? Are we going to have that movement to, like back up to previous resistance areas? Are we going to move through resistance areas? And what you want to see is growing participation from the companies inside the S&P. And see, even as we have made this video, you can see that participation is increasing. And I can actually put this down to a smaller time frame so you can see that more clearly. So we gapped up, we went down, we started to try and fill that overnight gap. And now we are starting to have some positive momentum. And so that's great. That gives us a bit more confidence that more companies, essentially 56%, are participating. So from the 500 companies, around 275 of them are above their 50 moving average. And the same percentage are only 55% are above the 100 simple moving average. So again, this is showing that there's still a lot of companies that have gone through really long periods of consolidation, and potentially they were not stacked positively. So I can think of companies like, let's just look at Visa, for example, something in the financials. If we look at the daily, they're totally stacked negatively. So even if Visa could get up over its 50 moving day average, it would first have to get up over the 50 and then up over the 100. So this shows that there are a significant number of companies that are inside the SPX that actually their EMAs or their moving averages are stacked negatively. So that's why we see a very tight percentage of companies that may be over the 50, but are still under the 100 because of the fact that they haven't been in a bullish trend prior to this little hiccup. And we lost their participation earlier on. Other companies might be like, let's look at something in the energy sector, like Exxon. I think that's Exxon. Well, yeah. So like Exxon. So now we've only recently flipped the moving averages positively, but now they're still stacked so closely together because we had this kind of rangy activity that the minute that they lost that uptrend, they're starting to now have this convergence again of the EMAs. And so now something like an ExxonMobil is below the 50, but above the 100 and 200. So, this is how you need to think about participation. When I reference something like breadth in the market, I'm talking about in the whatever company you're looking at, in its sector, how many companies are participating in a particular trend, whether that is a bullish trend or a bearish trend or a sideways trend. So in order to figure out, like, are we all going down the slide at the same time at the water park, or is just one person going really, really, really fast and the other people are like walking down the hill next to the slide? So if we need momentum, if we need volume, if we need breadth and participation, we want to actually know, are all of the people going down the slide at the water park, or is it just 20 people walking down the stairs and one company flying in a direction? And then you have to make sure that you are visualizing the entire process correctly. And so that is just to encourage you guys, please add those 3 charting pieces on your Thinkorswim platform, and it is $SPXA and then the average. So either 50, 100, 200, and then the letter R, as you can see it there. But in case it's too small on the video, you have it $SPXA, 50 or 100 or 200, and then R at the end. And I hope that that helps. And you can, you can actually change that to, on your chart, you can change the time frame as well. If you're in, trying to see if breadth is expanding or is falling apart. As you can see, the 100 is having trouble staying consistently above 55%. And we are flat on the 50. And also then on the 200, we are still at 65% or above the 200 moving day average, but that is not super exciting. I would have expected that we would have more companies participating, and it would be interesting for the different companies that you're in to see what happened to them on these dates, because here you can see that we were trading quite flat around the 71, 72% or 0.7, the 70%. And then right around on the 21st, I guess, we drop significantly below that. So a significant number of companies had drives down and have not been able to come up over that. And so those companies need to begin participating for us to really have a sustainable move back into that very directional bullish trend and out of the choppy markets. So that was a little bit longer than I had hoped, but I did want to make sure that I was being really clear and that you are actually able to use those 3 tickers to support the development of any thesis that you may have regarding going long single calls or single puts, or even if you are naked short calls and short puts and you're not using multi-leg options strategies, then this is kind of, this is really important information for you to have in the back of your mind. If you are trading any sector which is in the SPX, like the energy sector, financial sector, tech sector, and consumer discretionary. All right, have a wonderful day. Bye for now, guys.